Happy Friday, Melon Heads. All right. It is my favorite time of the week, my Friday afternoon live stream. I hope you guys are well. And I mentioned this a little bit this morning on my live stream about the orange herring, the Trump indictment, front page news. I don't care where you go. Fox News, CNN, MSNBC, all the alphabet soup in the news. That's all they want to talk about. And I'm here to tell you to forget that story. Do not follow that story. That is not the most important thing happening in the world right now. They, with a capital T, they want you to follow that story. They want you to fight with your buddy from college who is on the other side of the political spectrum. They want you to have a protest. So some schmuck at protest throws a punch at schmuck at counter protest. And then they start fighting. And then, oh, this guy cut a barrel in half and turned it into a shield because he thinks he's a freaking Spartan legionary and he went to a protest and threw a whole bunch of rocks and bottles. Forget all that stuff. That's what they want you to focus on. They want us to hate each other so that we don't notice that they're taking over our money. They're taking over the entire financial system. And I have got a smorgasbord of links today of stories that shows you how they are taking over the financial system, what they're doing, how they're even looping in the press to convince you that it's a good idea that we hand absolute control over our money to them. And there's a famous quote. I can't remember who it was. It was one of the Rothschilds. It's a famous quote. He said, "If I control the wealth of a nation, I care not who makes its laws." I'm sure I butchered that quote, but you get the point. Once they have control of the money, they can do anything to you. Anything they want. Ask somebody who went to that trucker rally in Canada last year what they think, what happened to their life. Don't let them do it. So don't worry about the orange herring, all right? Look, it's an emotionally charged subject. I get it. But it's not the biggest thing going on right now. It is not the most dangerous thing that is happening among the powers that be. So with that, we are going to shrink my big melon of a head, and we're going to say hello to my man, Mish the Mod. Mish, how we doing today, brother?
I'm doing so great. You would not believe how great I'm doing.
You're right. I don't believe it. I don't believe you, Mish. It's your poker face. We need to work on your poker face a little bit. All right. So let's see what we got going on. But, of course, number go up because we're inflating a bubble. So might as well have number going up. The S&P 500 is this right? This looks oddly familiar from this morning. Yeah, this is right. Up. Let me just refresh this. I'm not believing it. Much like Mish's poker face. No. So see, it wasn't right. It wasn't auto updating. The S&P is up 45 points or 1.18% right now. Having a pretty good day. Let's see what the Dow is doing. I'm going to have to refresh these windows as I go because for whatever reason, this is why I use investing.com because it auto updates in real time while I'm streaming. But today it's not doing it for whatever reason. We have got the Dow is up 304 points or 0.93%. We're going to end the quarter with a bang. Might as well. Stocks are not allowed to go down. Numbers are not allowed to go down. Commercial real estate is not allowed to go down. Powerful people are not allowed to lose money, folks. And the NASDAQ is up another 178 points, 179 points. Asset prices can't go down, folks. Unless we're talking about your puts. Those prices can't go down. Sorry. 12,191 on the NASDAQ, up a full 1.5% today. Again, the absurdity of this, the biggest bank that caters to Silicon Valley, that caters to tech companies, failed because those companies are burning through their cash too fast, and tech stocks have rallied like the blazes since that happened. Why? Because this is not a free market. It's not a fair market where party A and party B arrive at a fair market value of something being exchanged. No, you've got party C who comes in and says, no, I set the price of that thing, not A or B. And they can make their own money so they can make sure the price is whatever they say it is. That will work right up until it doesn't, and you don't want to be around when that stops working. I just want to look at a couple of the long-term charts a little bit here. This is the S&P 500 going back to about last summer, and I got a couple of things pointed out here. First of all, this red arrow, this is where Jim Cramer, right in the middle of Jerome Powell's interview with David Rubenstein at the DC Economic Club, where he tweeted almost to the minute at the market top that he said, I reiterate, this is a bull market. And of course, that triggered the sell-off. And then right down here, this red arrow, that is when the Bank Term Funding Program was announced. That's when the Federal Reserve turned on the fire hose of liquidity. And you can see it plain as day. I mean, look at what happened that day. That happened on Sunday night, right before market open, and stocks have just marched straight up ever since that day. I mean, they've barely taken a breather.
Well, what I think
Coincidentally,
is
we've got
funny,
the S&P is now back above both the 200-day and 50-day moving average. So technically, stocks are looking good. If you want to know a resistance level where you want to pay attention, keep an eye around 4180. That was the previous closing high from back in February. So that is the number to beat. We go above that one and we're off to the races. Similar chart looking at the Dow, although we just today recaptured the 50-day moving average, also above the 200-day moving average. Things looking pretty good on the Dow. Still have not broken above the previous high from February. That level is about 34,280. And on the long-term chart on the NASDAQ, we had that golden cross a couple of days ago, and the NASDAQ is actually right at the previous high from February. Watch out. If we keep this rally into the close, that will be a pretty big breakout for the NASDAQ. And again, biggest bank for tech stocks fails, tech stocks rally. Sure, why not? It's the 2020s. Let's not act like this is the most ridiculous thing to happen in this decade.
What I think is interesting, the low hit was called by Burry. Because he said sell and Kramer said buy, and Burry was wrong. Kramer was right. So that's like very rarely does that happen.
Yep. Michael Burry tweeted yesterday, I was wrong to say sell, which, hey, I'll give you credit. I mean, there's a lot of people on FinTwit who will never admit that they were wrong. There are some people on FinTwit who will contradict themselves within 5 minutes of each other just so they can come back 3 months later and say, see, I was right, by saying both sides of the same argument within a few minutes of each other. They're right no matter what. So for Barry to come back in and say, yeah, I got this one wrong, I'll give the guy credit for that. Now, in a free market, in a fair market, Michael Burry was right. And Jim Cramer was wrong. But we don't have a free and fair market. We have the kind of market Jim Cramer likes, where he's got a direct line to the Fed and he knows in advance what they're going to do. And so when the Fed opens the floodgates and prints money, stealing value from our savings, and someone's going to jump down my throat for saying printing money, whatever, adds liquidity, that makes it better. When the Fed adds liquidity, they inflate asset prices. And that is why Burry was wrong. Burry wasn't wrong to say sell. Burry was wrong in that he didn't factor in that the Fed would so quickly add liquidity to the market. That's what made Michael Burry wrong. While we're here, I got a couple of people are in the chats already. I'm going to say some thank yous. Who's first here? Let's see. Hello, Warrior Lady. Warrior Lady, that's a great name, by the way. Shield Maiden says to be bearish, short to even midterm is kind of risky, in my opinion. You know, you're right, Warrior Lady, about being bearish in the short term. That's not to say stocks won't go down on any given day. I wear it on my sleeve. I always say perma bear, right? I try to be upfront with that. But the first rule of investing, what is the first rule of investing? Do not fight the Fed. And right now, the Fed says number go up. So being short right now is fighting the Fed. All right. And, if you want to fight the Fed, I'm not here to tell you what to do. It's going to be risky. That's all. It's going to be risky. And hey, maybe it goes down. I think markets need to go down. I want markets to go down because I think we get a healthier, more prosperous economy if bad decisions, if reckless investments are penalized. It's healthier for everyone, especially in the long run. That being said, while the Fed is pumping liquidity, markets go higher. Now, there's a lot of people who are saying, by the way, there was a really good article put out by Concoda, who's on Substack. He called it quantitative teasing is what they're doing. Not Titan, Q teasing, quantitative teasing. That says what they're doing, this not QE or whatever you want to call it, that the thing about it is because it is so temporary and so quickly paid back, they're saying the effect of this may very quickly evaporate. And we may resume this downward slide. Okay, so that is a reason to be bearish. If Concoda is right, and I'm going to be honest with you, Concoda is highly, highly technical when it comes to banking and the inner workings of the banking system. And some of that article went right over my head, and I just did not follow all of it. So I want to be upfront with my own limitations. But if Concoda is right, then we will be resuming that downward move shortly. So I don't know, am I safely playing both sides of the fence here? Maybe. I try to present both sides of the argument. But right now, it's hard to argue that the Fed is propping up asset prices. So thank you very much, Warrior Lady. I appreciate the super chat and to your weighing in on the subject very much. And thank you, Mr. Jorgen Fagerthun. Did I pronounce that right? My Norwegian. I hope I'm not. My Northern European pronunciation is somewhat lacking. Thank you, Mr. Jorgen. He says, shiny finally above $24. Yes. Yes, Jorgen. I like the shiny. I like it a lot. Let's look at that real quick while we're here in the commodity space. We got gold, 1,988 down $10 today. They are just going to defend that 2,000 level at all costs. Somewhere at JPM right now, Jamie Dimon has got war paint on his face. He looks like Sir William Wallace, and he's just sitting there shouting, hold! Hold that line at 2,000. They're going to do everything they can to keep gold below $2,000. But silver, they're forgetting to suppress silver while they're at it. At 24.21, up 22 cents or 0.95%. I like to see silver rallying, although I've been saying it for a while now, guys. I expect some trickery. And here we go. This is the gold chart. Again, going back to the beginning of 2020. All right, so here is the rally in the summer of 2020. Here is the rally in silver squeeze in early 2021. Here is when we broke above 2,000 last year. And here's where we are right now. Guys, we're right at the level where they start their smash every time. Maybe this is the time it fails. I would love it if it failed this time. But you can expect it. Let's not be surprised when they do it. All right? And maybe the fact that someone as bullish precious metals as me is finally saying, hey, don't be fooled by this rally, maybe that's a sign that this isn't the top. I'm just trying to give you both sides here, all right? I'm just going to say I remain skeptical because there has been no material change to the way the banks do business and to the way the regulators approach it. I have no reason to suspect they won't do what they've always done and get away with it again. So that's what's going on in the gold space. And let me see, who am I? Thank you very much, Jorgen. And again, congratulations if you are bullish on the shinies. And thank you, Ryan B. Says, appreciate the channel. Thank you. Hoping everyone stays safe with the tornadoes down south. I agree. Hey, Mish, you want to give us a quick, like 10 seconds? What's the deal with that storm? Have you been following the...
I have. So right now there's a tornado warnings in Arkansas. In fact, they have one that touched down just outside of, not Little Rock, but over in that area. No damage to people or places. But that cell, if you will, is supposed to march north through Iowa and into Illinois. So, yeah, everybody stay safe out of there. It started basically in Dallas and it's supposed to end up in Chicago.
All right. So far, not a catastrophe. Hopefully everybody in the path of that one that touchdown is okay. Thank you, by the way. That was not planned to do a weather report. I'm not going to make you my weatherman, Mish. Don't worry. But appreciate the sentiment, Ryan. Thank you for the support of the channel. And yes, everybody who is in the path of that storm, I hope you guys stay safe. Check those batteries. Well, keep your heads down. Wear a helmet, everybody. And thank you very much to First Last and somewhere in between. Do you have a middle name, First Last? I'm guessing it might be middle. I don't know. What will happen to the currencies that are backed by USD when the USD goes to crap? And what should I do to protect my money? Well, I think you answered your own question, right? If your currency is backed by the USD and the USD goes to crap, that means you're going to crap along with the USD. All right, so I mean that's pretty self-explanatory there. Now, that being said, the US dollar has been losing its hegemony slowly since 1999. All right. And I've been doing a lot of work on this over the last few days because I want to make a video about the de-dollarization. I think the rhetoric is getting a little overheated on the de-dollarization side. I do see a lot of moves towards de-dollarization, and I do see a lot of people, particularly in the East, trying to accelerate that move. But I have even less confidence in central bankers in China and Russia than I have in central bankers here. I think they all suck, and I think at the very least, here in the States, people are allowed to point at them and say, hey, you suck. Over in China and Russia, you point at the central bankers and say, hey, you suck. You're either going to disappear, get beat up by plainclothes police officers, or die of freaking radiation poisoning mysteriously. So I don't have a lot of confidence that they're going to run things so smoothly over there that it instantly replaces the US dollar. But I do see the US dollar slowly losing its dominance as global reserve currency to a basket of other currencies. Everything from the Swedish krona, the Korean won, the Australian dollar, the Canadian dollar, the Singapore dollar, they're all gaining. They're all gaining reserve status slowly and evenly as the US dollar loses it. So, yeah, the world is slowly de-dollarizing, but there is no clear winner at the moment. There is no currency stepping up to fill that void. And a lot of you guys are going to get out the torches and pitchforks when I say it. The closest thing to any challenge to the US dollar's dominance is going to be Bitcoin. Yep, I can hear the boos, and I'm like dodging tomatoes right now. I know I got a lot of diehard gold bugs in this group. I know. Bitcoin is the only thing that is currently in use as a global reserve currency. It's in use in some small South American countries that has managed scarcity. There is no currency in the world that does not have managed that has managed scarcity. There is no gold standard or silver standard left anywhere in the world, which means all global currencies have the same problem that the dollar has. So it's all fine and dandy if you want to de-dollarize, but you're just going to end up with a different problem. And I don't think the Chinese or the Russians are going to be better stewards of your reserves than the Federal Reserve is going to be. I just don't. I don't have any faith in any of them. So that's my take on the US dollar. I got a couple of stories queued up for later on in the stream that we can talk about the de-dollarization, because there was something that came out today that says maybe they're going to be getting one that might be a challenge, and that'll be interesting to see. And I have a theory on what they might use to back it. And thank you, JJ Watt, who says, since the crisis will be the mother of all crashes, I think it probably will be, or it should be. It's not for certain. Do you think that banks will be forced to call mortgages to be paid in full? No. Well, JJ, I'm not sure it's U.S. dollar denominated, your chat. In the U.S., they can't do that. That after 1929, mortgages in the United States, to my knowledge, are not callable. They can't just say, hey, miss, you got to pay your mortgage back today. I need the money. Or, Jack, you got to pay your money back today. Go ahead,
they would have to change some laws for that to happen. I mean, it's not unheard of. But what I said in chat is, if they do pull something like that, it is so far gone, it doesn't matter.
Yeah. At that point, it's going to be like, good luck. If you want to evict me from my house, you better bring enough firepower to make sure you can get the job done. I mean, maybe I just got myself in trouble saying that. But no, I don't think they'll get the callable mortgages. I think they'll turn on the printers and they'll destroy the currency before it gets to that point. But thank you very much, Mr. Watt.
I think we'll get 40-year mortgages before we that ever came about.
Yep. Shout out to the Economic Ninja. He's been calling the 40-year mortgage for a while, and I think we're probably going to start hearing about that pretty soon, because their answer every time is to further inflate asset bubbles. And how do you further inflate the housing bubble? Either lowering interest rates or extending the duration of the loan. And 40-year mortgages would allow them to further inflate the housing bubble without lowering interest rates. All right. Caught up on those. So let's talk about a little bit of some of the things that are going on here. So what do I think they're trying to use the orange herring to distract us from? Well, let's take a look at this one. This came out yesterday. White House pushes new rules for mid-sized banks without Congress. Trying to do this without an act of Congress, right? Because we have a dysfunctional legislature, so we just rule by supreme executive decree. The king has decided. That's the way we do business now, right? Partially because we suck at choosing our leaders. We have two lousy parties that produce lousy candidates that we're forced to choose between, so we get lousy presidents. And our legislators are even worse. Go figure, they're even worse. So, yeah, our lousy president is trying to change the bank rules without our lousy Congress. The Biden administration urged banking authorities to tighten regulation of mid-sized banks, which it said could be pushed through without support from a split Congress. Congress is split for a reason, because people don't always agree on everything. That's not a bug of the system, that's a feature. Banks with between $100 billion and $250 billion in assets should hold more liquid assets, increase their capital, submit to regular stress tests, and write living wills that detail how they can be wound down, the White House said. And folks, this, I think, in my opinion, is why I think they're trotting out this indictment now, the orange herring. I think what they're trying to distract us from is that the government is trying to nationalize all banking under the Federal Reserve. This is a 100% takeover of the banking system by the government. Maybe that's a little hyperbolic, and feel free to prove me wrong. If you think that's wrong, I welcome the challenge. But look, Soleil Amarova, who they put up for the controller of the currency, controversial, full-blown card-carrying communist, had to withdraw her name from consideration because people were onto what she was up to. She wanted to do this. She wanted the Fed to take over all banking. She wanted all bank accounts to be at the Fed, where they could basically institute monetary policy directly through your savings and checking accounts. Oh, you want to give everybody stimmies? Deposit the money right into their account. Oh, you want to do quantitative tightening? Just take the money directly out of people's account. Those were Soleil Amarova's own words. That's what she wanted to do. And Biden put her up for the controller of the currency. Now, they couldn't get that done, but in typical fashion of not letting a crisis go to waste, here's what we have right now. So let's talk about a couple of these proposals here, what they're talking about. First of all, everything they have done in response to this crisis has made this crisis worse for small banks to the benefit of big banks. All right, so everything they're doing right now is exactly what the big banks want. Now, they're saying that banks between 100 and 250 billion in assets should hold more liquid assets. Well, what caused this crisis to begin with? You guys remember? It was unrealized losses on U.S. treasuries. And if they're saying small and medium banks should hold more liquid assets, keep in mind, Silicon Valley Bank had most of its holdings in U.S. treasuries, the single most liquid asset in the world. Only cash is more liquid than U.S. treasuries. So what is it that they're trying? How is this going to prevent the next crisis? This crisis was caused by banks holding the most liquid assets, and they're saying banks should hold more liquid assets. So right away, this doesn't pass a sniff test on how they're going to solve the problem. Increase their capital. Do you guys remember why Silicon Valley Bank failed? Well, first of all, it was their unrealized losses from bonds. And so what did they do? They announced that they were going to try to increase their capital by issuing shares and selling bonds. So again, they're trying to say exactly what failed Silicon Valley Bank. We're going to make all the banks do that. We're going to intentionally fail little banks. That's what they're saying here. And then they're also saying they need to submit to regular stress tests and write living wills. And while we're at it, we're going to just heap some regulatory compliance burden on these small banks that are already on the brink of failure. Now they need to hire another 50 people in their compliance department and go through these stress tests every year. Which, what does that mean? These banks are going to have their margins even further compressed. They're going to be even less competitive, and they're going to be forced to sell themselves to the bigger banks. Everything they're proposing in this law, which I will add, is without Congress. Every single thing they're proposing doing right now, which they're saying they can just do by executive decree, will kill these medium-sized banks and further increase the size of the big banks. Every last detail of it.
And unfortunately, since our Congress is dysfunctional, they'll never come out and unpass whatever he puts into place.
Yeah, absolutely. I mean, Mish, that might even be optimistic. You know, like best case scenario, they're dysfunctional. And, you know, look, if you're sitting there, guys, and, you know, you could probably figure where I lay on the political spectrum, right? I don't hide that. I don't advertise it, but I don't hide it either. I don't think the Republicans are going to ride in on a white horse and save you here, guys. Because where do you think they get their money from? Who's the single largest Republican donor? Ken Griffin, Citadel. Whoops. The guy who took away the buy button, the guy who rigged the stock market. You think the Republicans who get their money from him are going to come in and stop this? Probably not. You're going to have a couple of token people who stand up and make speeches and get their 15 minutes of fame, but it's not going to stop it. No way. And this is happening right now as we speak. This was just put out yesterday on the same day the indictment was announced. This came out at 4:57 p.m. yesterday. This is right around the time the indictment was announced, wasn't it?
Hey, quick question in the chat. Someone wants to know, is this going to affect credit unions?
I don't know. I don't know how this will affect credit unions, to be honest with you. Credit unions are governed by different statutes than banks. But if you ask me, let's say this doesn't affect credit unions. Do you think they'll stop there? No. So maybe I can't tell you if this directly affects credit unions, but indirectly, yes, this will eventually affect credit unions because once they've killed the small and medium sized banks, who's left to go after? They will absolutely go after the credit unions too. I can't tell you directly whether credit unions are going to be included in this. I don't know that there's many credit unions with 100 billion and 250 billion in assets. Maybe Navy Federal has that big mish, but I don't think this particular one will affect it. No. All right. Thank you for that question, by the way.
Mm-hmm.
Now, how are they going to get this done? How are they going to sell to the public the killing of all the little banks and ballooning the size of the big banks? How are they going to do that? Because we asked them to. That's how. Everything they try to do, first they create a crisis that makes it necessary. And how do you make it a crisis? How do you normalize it? You call in a favor with your useful idiots in the press. Enter my man, Mark Rubenstein. There he is. And look at this article in Bloomberg. This came out, the day before the announcement of this executive order that's going to kill little banks. The U.S. is paying the price for being overbanked. Overbanked? Like, these are the same guys who are always talking about, we need to save the unbanked. We need to help the unbanked. Those poor unbanked. Those poor people who aren't charged minimum balance fees and don't have to pay to get their cash out of an ATM machine. Oh, those poor unbanked people. I wish I was unbanked, to be honest with you. I mean, I need to use a bank to pay my bills and everything. I wish I didn't need a bank at all. I would be totally cool with my money under a mattress, but whatever. Too many dirtbags in the world, and we don't prosecute the real dirtbags. No, we just prosecute the orange herrings. If you actually commit violent crime, you're out the next day. Are you kidding me? Violent crime, you're like a hero if you commit violent crime. Oh, this poor, underprivileged person who was driven to violence. Driven. They're always driven to it, right? The actual criminals, they're driven to it. But anyway, I'm getting off track. So this guy, Mark Rubenstein, he's on Bloomberg, and he's saying the U.S. is paying the price for being overbanked. Canada has fewer banks than the state of North Dakota. Well, congratulations, Canada, your fewer banks. And I'm going to skip down most of what he's talking to here, but this is what I want to get to right now. Even after multiple mergers and acquisitions and failures, there may still be too many banks in America. Consumers get lots of choice, but the competition such a fragmented system breeds can lead to instability. And isn't this just like these monopolistic government hack jobs? And Bloomberg is among the worst. Maybe they're not as bad as CNBC, but they're not much better. This is just awful. They are saying consumers get lots of choice, and that's a bad thing because the competition of such a fragmented system could lead to instability. You poor folks out there, are you suffering from too much competition among the banks? Gee, when's the last time you went to a bank and they did something lousy and screwed you over and charged you a fee or did this or did that, or their system went down and you couldn't pay a bill because their website wasn't working and you got charged a late fee from the bill you were trying to pay, all because of your stupid bank? When's the last time you said to yourself, gee, I wish they had less competition? You know what would solve this problem? Less competition among these a-holes. That's just what we need. Yep, less competition. Wouldn't it be great if banks were run like the DMV? That would be, wouldn't that would speed us on our way to excellence. This is Bloomberg is saying this. This is the biggest financial publication. I don't know, maybe the Wall Street Journal is more widely read, but this is close. And this guy is writing this whole article all about how we just need less competition in the banking sector, that would solve the problem. And, by the way, since Mark Rubenstein, we can't have this old male do it. Let's trot out Jessica Carl, who says the same thing in her opinion piece. America just has way, way too many banks. Competition can turn unhealthy when it encourages too much risk-taking. What? When it encourages too much risk? No. You know what encourages risk-taking? When you label banks as too big to fail and you get the government to promise that no matter how much risk they take, they'll get covered. But their competition won't get covered. That's what's going on right now. The government is saying, Silicon Valley screwed up. We're going to save them. But the other banks, no, we're not going to save them. And then they're sitting there saying, gee, I wonder why everybody's leaving the small banks to go to the big banks. You know what the solution is, according to Jessica Carl? We need to get rid of the little banks. That's the solution. And she goes on and writes this 50,000 word article. 3/4 of it is her complaining that there's too many people named Jessica. Oh, look at this chart of how many people were named Jessica in the 1980s. Oh, my God. Oh, your name is Jessica, too. We have so much in common. Let's get rid of all the small banks. These people are useful idiots writing this stuff. Again, when you see these articles, this is not Jessica Carl's opinion. Jessica Carl was told what her opinion was by the editor at the paper who said, my corporate puppets want fewer banks. Jessica, give me 50,000 words on why we need fewer banks and pass it off as your own thought. By the way, no offense, Jessica Carl. I'm sure you're a very nice person. I was pretty brutal to Miss Carl here, but whatever. This is the press, the financial press, doing the bidding of the big banks who are using this crisis and using government regulators and the press to further increase their monopoly on finance. And if you really think like Jessica Carl was told to think, that America just has way too many banks, take a look at this chart. Shout out to the Kobayashi letter on Twitter. I have been referring to Kobayashi letter a lot lately on this stream. Guys, I highly recommend you follow them. Here's what they look like, the Kobayashi letter. That's their Twitter handle. I highly recommend you follow these guys. They have been freaking gold lately. They put out this chart today. The number of banks in the U.S. going all the way back to 1940. All right, look. All these years, we did not have widespread financial crises every 2 or 3 years in the United States. We had over 14,000 banks in the U.S. There was a way too many banks back then, right, Jessica? And then look what happens. In 1980, in the mid-'80s, is when we got rid of the law that said banks weren't allowed to do business across state lines. That's when the big mega monolith banks finally started to become a thing. And look at how the banks have just consolidated ever since. And then the GFC hits and it consolidates even further. And right now, this trend is steepening big time because of Janet Yellen and her arbitrary decision to bail out Silicon Valley Bank and then deny the small regional banks the same courtesy. And now all the money is leaving the small regional banks. They're all going to fail and they're going to be bought up by all the big monolithic banks. And what do you think is going to happen? Once we're down to a handful of big 6 or 7 mega banks, what's going to happen? The Federal Reserve is going to have absolute control over the financial system because the Federal Reserve controls the big banks. And the big banks control the Federal Reserve, don't they? More on that in just a minute. So how is it that Bloomberg is right here, even as the government is creating an uneven playing field that is killing the small and the regional banks? You have these useful idiots on Bloomberg who are saying we have too many banks when America has been bleeding banks for the last 30 years, 35 years. We have been bleeding out banks. And according to the Kobayashi letter, we now have one bank in America for every 70,000 people. And don't think there's 70,000 people per bank because 6 or 7 of those banks have millions of them. They're killing small banks. They're using the press to get away with it. And, what's that going to look like? Let me get to this super chat real quick from Mr. Steve Woitis, and I'll tell you what that looks like in the long run. Steve says, commercial real estate crisis is for real. Amen, brother. It is for real. It's bigger than most people realize. Now that I've seen some of the data points, it's way bigger than even I realized a few weeks and months ago when I was posting videos about commercial real estate. A REIT fund I'm in dropped 6% in 15 days. Yikes. Last time this happened in April of 2020, they froze the fund, no selling. Well, be careful, Steve, because we're already seeing that in a lot of these REITs. I've been talking about the Blackstone REIT. They've been frozen for 4 months. And I can't tell you guys what to do. I don't have the piece of paper, the permit from the government that tells me what to tell you to do. And then all I can tell you right now is $60 billion worth of commercial real estate and other securities from Signature Bank were just handed over to a third party for the sake of selling those assets. And those assets represent more than the total market has absorbed for years. So all that stuff, if they just decide to dump it on the market in the same day, it's going to crash. And I don't know that they won't do that. I mean, it would be stupid for them to do it, but it's not their money. They're selling somebody else's money, somebody else's assets. So maybe they just decide, you know what, I want to get this over with. Fire sale, end of the movie margin call, 1 day only. By lunch, we need to unload all this crap. Maybe that's what happens. They could crash the commercial real estate market in a day if they put all that stuff up for sale all at once. I'm not saying they'll do that, but they could, and I wouldn't bet the farm that they're not going to do that. So just be careful, Steve. That's all. Be careful, brother. Thank you very much, sir, for the super chat and for the support of the channel. So speaking of commercial real estate, Steve, that was actually a really good segue. No, that wasn't planned, but thank you, Steve. When you get the consolidation of the banks, this is the kind of crap that you end up with, all right? And this story, I was sitting alone in my office, shouting at the screen like a lunatic again when I saw this, as I often do. This is one of those moments when Gigi's upstairs and you hear her shout down, "Poppy, is everything okay down there?" That was today when I was reading this one. New York Fed board member warns of commercial real estate risks. Okay, that's a pretty common, pretty innocuous headline these days, right? We've all been talking about commercial real estate risks. No surprises here. All right, no big deal, right? New York Fed board member. Who is this New York Fed board member? Well, let's see. New York, on March 24th, this was a couple of days ago, an executive who also serves on the board overseeing the New York Federal Reserve warned on Twitter of potentially systemic problems in the real estate finance market and called on the industry to work with authorities to avoid things getting out of hand. Noting that there is a $1.5 trillion in commercial real estate debt set to mature in the next 3 years, Scott Reckler, who is CEO of RXR, a large property manager and developer, tweeted that the bulk of the debt was financed when base interest rates were near zero and that this debt needs to be financed in an environment where rates and higher values are lower in the market with less liquidity. Scott Reckler, the CEO of RXR, he is on the board of directors of the New York Fed. And he's saying the Federal Reserve and financial regulators need to create an environment that is more appropriate for people with commercial real estate debt to roll over their mortgages, i.e., please lower interest rates or create some kind of a bailout program for commercial real estate so that the value of commercial real estate doesn't fall because all of this real estate debt is coming due. What he's not saying is, oh, by the way, I'm CEO of one of the largest real estate directors in New York City and that my company stands to get wiped out by our commercial real estate debt. Please bail out my company. Oh, by the way, I'm on the board of directors of the Federal Bank that would be responsible for issuing that bailout. No perceived conflict of interest there, right? Do you think there might be the appearance of a conflict of interest here? You think maybe Scott Reckler, CEO of RXR, who has some $80 billion of commercial real estate under management at his firm? How does a guy like that end up on the board of directors of the Federal Reserve? The regulators are the same people who owe this money. The people who are going to make the decision to bail out these firms are the CEOs of these firms? Are you kidding? How does this happen? And then we've got Jessica Carl over at Bloomberg saying we need more of this. We have too many banks. We need to concentrate even more power at the top. This is the kind of crap you end up with this guy, Scott Reckler. Here he is. Here's his Twitter thread, Scott Reckler. Hey, I'm on the New York Federal Reserve Board of Directors, and I also have $80 billion worth of commercial real estate debt, and I think it's a swell idea that my Federal Reserve bail out my company with your money. No problem there, right? Oh, and just in case, here's Scott Reckler on Becky Quick at CNBC telling his story because CNBC would be happy to have this Federal Reserve director come on and talk about how he should be allowed to bail out his own company by devaluing the average Joe's money. CNBC will just, sure, no problem. Would you like us to hold a parking space for you, Mr. Reckler? Oh, my pulse is pounding right now. I got so mad when I saw this article, and I read this whole thread where he talks about the housing shortage and poor, unfortunate, unrepresented, marginalized communities. All he's talking about is please bail out my company. Please don't make me lose money. I'm not allowed to lose money. I'm in the club. Great big club, and we ain't in it. And they're trying to make the club smaller, and they're using the orange herring to distract you from what's going on. This is why this indictment is happening now. All right? Because this commercial real estate problem is going to blow up in their faces. And they need you looking the other way when Scott Reckler signs off on a bailout of his own company. Go ahead, Mish.
Sorry, I didn't say anything. Oh, it is getting time to market close if you want to go through the markets.
Oh, okay. I thought I heard you say something. I'm sorry.
I did. It was just a comment on what you were saying. Nothing big.
Wow, I just noticed. Sorry, I just looked at the StreamYard. I'm red in the face right now. I'm really angry.
Oh, that's what I asked. I asked if you felt better.
Deep breaths, Jack. Deep breaths. I'm okay, guys. This is me. This is my day. I told you, like I was literally shouting at my monitor. I'd sit in the office and I shout into the ether all day long. That's pretty much my day. That and chickens. Okay, the S&P ended up closing up 55 points or 1.35% at 4,105. By the way, Mike Binder, Robin RC Models, if you're watching, that 4,600 target that you gave me a few weeks ago, that might be back within the realm of all real numbers. We'll see. I'm not saying we will hit it. I was very dismissive of it when you said it the first time, but we're getting back towards that point. We'll see. The Dow ended up almost up 400 points. Look at that big, well, not that big, but we had a big gap up into the close there, 33,254 to close out the quarter. Up 1.2%, 33,254. And the NASDAQ ending the day with two big green candles up. Why not? 12,220. That's a lot of twos. Up 208 points or 1.7%. Sure, everybody pile into tech stocks. By the way, is this a bad time to deflate some tech bubbles? Let's just mention this one real quick. Virgin Orbit fails to secure funding and will cease operations and lay off nearly entire workforce. This is as people are piling into tech stocks, guys.
Well, I think this is important because this is a Virgin Orbit. They wanted to go, but they ended up being more of an R&D kind of organization than an actual put into practice like SpaceX is. Yep. So we just lost one of our big R&Ds for space, and that's tough.
Yep. And look, I love space travel. I'm a sci-fi guy. You know, we got my Darth going on in the background there. All right. I love space exploration and space travel, right? But pre-revenue companies that burn through cash, they're the first thing to go during difficult times, during high interest rate environments, during deleveraging. And that's why every day I'm in disbelief that the NASDAQ continues to rise, because the NASDAQ is made up of the riskier stocks. There's a lot of froth in the NASDAQ. And during low interest rates and times of expanding credit, the NASDAQ does great. But that's not what we're in right now. We are in rising interest rates and contracting credit. The NASDAQ should be in free fall right now. And it's not, because the Fed is artificially inflating this bubble. These kinds of things don't end well. Virgin Orbit is ceasing operations for the foreseeable future after failing to secure a funding lifeline, according to CEO Dan Hart, who told employees during an all-hands meeting on Thursday, the company will lay off all but 100 employees, according to audio, the 5 p.m. Eastern Time meeting obtained by CNBC. So there's another 900 or so layoffs, and it's in tech companies. I hate to bust the tech bubble, guys, but there it is. All right. I had mentioned before that we were going to talk a little bit about the dollar and the de-dollaring. Somebody had left a super chat to that effect. And, when I mentioned about the dollar losing its hegemony slowly since 1999, the dollar has lost its dominance. It was 72% of global reserves in 1999. Now it is 59%. All right. So the U.S. dollar has lost a good portion of its dominance as the world's reserve currency. Now, it is still way, way higher than any other reserve currency. Nothing even comes close. Not even the euro comes even close to how commonly held it is.
But we're at 59% of world reserves.
Yep. And the euro's, it's in the teens somewhere, but the euro's not even close. And the euro hasn't really gained If you take all the currencies that made up what became the euro and where they were at in the mid 90s, it's roughly the same amount. Maybe they've gained a percent or two, but not much. Really, the dollar has lost hegemony to everything. Everything has picked up a percent or two. All these other currencies, the Canadian dollar, Australian dollar, the krona, the yuan gained about 2%. But this is interesting because Russia talks up the prospects of BRICS countries developing a new currency. Now, this could be jawboning here. Keep in mind, if they could do this today, they would do it. They can't because most of these countries, South Africa needs to print money to fix its power grid. China needs to print money to prevent its real estate market and its banks from collapsing. Russia needs to print money to fund its war in Ukraine. That's turned into a debacle. Oh, by the way, China has a collapsing population that they need to support with public welfare programs. China wants to invade Taiwan. Good luck doing that if you're not trying to print money. So all of these countries that make up BRICS, it's not like they can just say, boom, gold standard, we're good. Not if they want to do everything they need to do. All right, these people can't get out of their own way to do this. All right, somebody commented this on one of my videos yesterday. Oh, all they have to do is peg the BRICS currency to gold. That is all they have to do, but you need to realize what that really means, right? The thing about a gold standard is it is a big ball and chain on people who want to spend money in government. And governments don't willingly chain themselves to reality, ever. Quite the opposite. They are always very quick to unchain themselves. So I don't think this is happening anytime soon, but this is interesting. A top Russian official has reportedly claimed that the countries of the BRICS alliance, Brazil, Russia, India, China, and South Africa, are working to create their own currency. A new world order, I hate that phrase, but a new world order could be emerging as economic powerhouses increase their efforts to distance themselves from dollar hegemony. According to reports, a top Russian official has claimed that the BRICS alliance is working on creating its own currency. Where was it? They talked about what it would be backed by. The word. Oh, where is it? All right, so I'm going to skip it in the article, but they mentioned that it would be backed by gold and other commodities. All right, now
it's that whole concept of basket. To go back on the gold standard, even at 10%, would be like $1 trillion in gold. Who has that much gold?
Right.
So
now they're buying a lot of gold.
They are, but that's still a lot of gold to get to 1 trillion ounces.
Well, that's at today's valuation.
Mm-hmm.
And that's the thing. A lot of the people who say we can't go back on a gold standard because we'd need so many ounces of gold. Mm-hmm. No, we would just have to revalue gold. Instead of being 2,000 an ounce, it would have to be $1 million an ounce, right?
It would, and they would have to also have the market to support it. Because you're right. China can say ours is $1 million an ounce, and everybody's like, "Well, I'm going to China to sell it."
Yeah, and it also means you can't issue more currency unless you dig up more gold and put it in your reserves. And
I think
we have governments.
They're trying to go to a basket of metals, so not one person has to do that one big chunk of gold. They can add in their silver and their platinum, and yeah.
Now here's the thing: a basket of currency that introduces a little bit of wiggle room. There's plenty of challenges about that basket of commodities, right? Because now you can tweak the basket by going underweight platinum, overweight gold, or underweight silver, overweight oil. You can mess with the value of the currency by tweaking whatever market for whatever commodity is, right? Gold is not really a consumable commodity. Gold just is. And so gold is a very stable commodity to back currency. That's why gold has been the most successful backer of currencies. Now, the interesting thing is in BRICS is the R and the S, because Russia and South Africa combined produce about 96% of the world's platinum group metals. That's platinum, palladium, rhodium, rubidium, or whatever. There's a couple of other ones. But that's interesting because if they were to somehow peg to those platinum group metals, they would have an absolute monopoly on that market. The U.S. only produces like 1.5% of the PGM metals in the world, and PGM mines are notoriously filthy operating environments, very dangerous to work in. And so the U.S. is not about to create any of these mines anytime soon. But if they did want to do something that would really hurt the U.S. and help them, that's one possible avenue they could go. But keep in mind, those are very volatile markets, right? If you're going to back your currency to platinum and palladium, well, now your dollar is your currency is basically a function of the auto market, isn't it? Because that's what platinum and palladium is used from, not a stable currency. It won't result in a stable currency, but it will be very painful for the US. So I thought it was interesting because I was thinking about what would they use. Obviously, oil comes to mind, but the US produces a lot of oil, and so does America's allies. But platinum and palladium, the PGM metals, Russia and South Africa dominate the market for virtually all of the PGM metals. So that I think is worth keeping an eye on. And anyways, I saw that story was out there. And real quick, I want to say thank you, Cheeseburger, my man Matt. He says, and now you know how Manarino came to be how he is. It's a freak show on an epic scale. I like the spelling of an epic. It is a freak show. Well, duh. That's my Manarino. The Fed will do what the Fed always does, which is to inflate. They will continue to inflate without end. Duh. That's my Manarino. Love you, Greg. You're awesome, brother. Greg Manarino, folks, one of the great ones on the tubes. And Cheeseburger was the inspiration for the MMMRI video with his super chat. So thank you very much, Matt, for both the inspiration for that video and for the super chat and the support of the channel. And not to be outdone, here's Matt again. He says the gold ball and chain scenario would necessitate something like a great reset due to a lack of global liquidity. Well, let's segue right into that. Good super chats, good segues today, guys, because they won't ball and chain themselves. They will ball and chain everyone else and not themselves. So they'll never go back on the Great Reset will never go back on the gold standard, because the Great Reset, they have immense power with their ability to print money and grant it to themselves via inflating whatever asset they want inflated at any given time. Case in point, Mr. Scott Reckler over here on Twitter, who works for the Federal Reserve as a board of director, who is advocating to bail out his own company, right? They'll never give up that ability. A gold standard, Scott Reckler can't do that if we're on a gold standard, because he can't have the Fed come in and create currency out of thin air to bail out his company. They'll never give up that power willingly. People don't do that. But what they would do, maybe to control the inflation, is they could hamstring everybody else. They could put everybody else in chains through their CBDCs, and that way there is no inflation, right? People can't bid up the price of gasoline if the CBDC says you're only allowed to buy 10 gallons a week. Problem solved. We just throttled demand. We destroyed demand by turning off the poor's money when they needed to use it. Now Scott Reckler can bail out his company and still get cheap gasoline for his yacht or diesel for his yacht whenever he wants. And look, I'm using Scott Reckler here as an example. Guys, please don't bombard Scott Reckler's inbox with hate mail or anything. That's not what I'm trying to do. He's just a convenient example of this. This is rampant in the whole Federal Reserve system, in the whole banking system, all right? This is just one guy of many. This is one of they. But no, powerful people will never intentionally hamstring themselves. Only very few great powerful men have ever intentionally limited their own power. Most of them are signers of the Declaration of Independence, people who founded this country, and they took on the biggest empire on earth at great risk to their own physical safety. A lot of them ended up dead. A lot of their families ended up dead. A lot of them lost everything for the purpose of becoming immensely powerful and then immediately reducing their own power. That's not who's in charge now anymore. The people they warned us about are in charge now. So very few people will ever intentionally restrict their own power. It has to be done, sadly, forcefully or within the confines of the law. Let's say that. Thank you very much, Cheeseburger. I appreciate the super chat and the support of the channel, sir. And thank you, Dan Hadeen.
While we're talking about this,
Yep.
Jordan had a good point in the chat. China's great reopening isn't really taking effect. They're dying for orders because all of the America orders, we're all down for new orders, right? Our manufacturing's down. We don't need stuff from China right now.
Yep.
So their great consumer is not consuming right now.
Yeah, and China actually, Stephen Van Meter just a few hours ago put out a video on this subject about China. Highly recommend Stephen Van Meter's channel, by the way. Another one of the great ones on the tubes about how China right now, especially the Chinese press, they're talking about these great PMI reports that just came out of China, and they're not really that great. Their PMI reports are, it's at like 52 and a half or 52.6, which is like nominal growth. But keep in mind, this is a year over year number. And a year ago, China was under the most ridiculous draconian lockdowns imaginable. So they're only up a marginal amount from where they were a year ago. And it's because the demand from the States isn't there. And the PBOC right now, we're talking about money printing and how they can't get out of their own way and why they'll never peg themselves to gold. The People's Bank of China right now is printing a ton of money and injecting it into their system to try to maintain their bond bubble. That whole thing with Evergrande, that's still a thing in China, folks. They just papered over it with money and low rates. So China can't just go on the gold standard, not when they're trillions of dollars in debt and their real estate bubble. And by the way, the real estate bubble infects their private sector. It infects their state and local governments. It infects their federal government. If they go and just automatically peg themselves to gold, which I think would be a good decision, by the way, it would be immensely catastrophically painful in the short term. All right. And I don't think they'll do it. I really don't. Again, people don't willingly hamstring themselves. Thank you very much, Dan Hedin, who says, yes, please, platinum for the win, Alex. I like the shinies. I don't own any platinum myself. I own a little bit of PLTM, which is the ETF that tracks platinum. That was a speculative bet. I've been in that position for a while. I don't generally advocate metal-backed ETFs. They're really only for trading positions, not for long-term holds, because when it comes down to it, if there's a squeeze on the metals, I suspect those ETFs will lock out their investors. They'll let the authorized participants cash in and redeem the metal, and then we'll find out when only retail investors are left in those funds, oh, we're actually out of metal. There's nothing in the fund. And then those funds, like the SLV, like the GLD, will fail. All right. But yeah, I like the idea of platinum. Keep in mind, though, platinum, folks, is right now, at least at the moment, predominantly an industrial metal. There is a certain bullion application for it, and people do buy platinum as a bullion metal, but most of it goes into automotives. And nobody's buying new cars right now. Nobody. So be careful with platinum. That's the only thing. It's a bet on the auto industry. It is a little bit of a dollar hedge, a little bit, but we're not heading into a prosperous time for the car market, folks. And that could hurt platinum, even though the supply of platinum is being threatened by these ridiculous power outages in South Africa. The demand for platinum is also being threatened.
So I am watching several automotive stocks that when the crash happens, I'm going to go get in on the cheap.
Yeah, I mean, if you had bought, well, it depends. Depending on when you bought General Motors or Ford, you did really well. If you bought it a little bit too early, you got wiped out. You lost everything. So, but if it follows the last big financial crisis, right? When lending standards are tightened, when the banks go on defense, which is what the banks are currently doing right now, they're writing less loans. Fewer cars are bought because it gets more expensive to borrow money to buy a car. And unless you're going to buy a new car for cash, how many people out there do you think can afford a new car for cash right now? What's the median price of a car in the United States? Like $48,000 for a new car or something like that right now? Nobody's paying cash for new cars.
$770 a month is the average. Wow. That's the average.
Wow. That's amazing that people are, when I hear about these $1,000 car payments and things that people are paying, it blows my mind. I pay cash for cars. I don't like making monthly payments. I don't like paying higher interest rates. Generally, if the interest rate I'm going to be paying is higher than the rate of inflation, I'm not borrowing. So, but thank you very much, Dan Hedin. Careful on that platinum position. It's not a sure thing. All right. And that's why I stick to gold and silver. Even silver is not a sure thing. Silver is also a very heavily industrial metal, but I think silver is more monetary than platinum is. Platinum is more a pure play industrial metal. And I also think silver is more manipulated than platinum is. Although I'm hearing stories, I haven't DD'd it myself, but I'm hearing stories that platinum market is getting very illiquid and very manipulated. I have not DD'd that one myself. That's just me repeating rumors that I've heard. Just want to put the asterisk on that one.
The COMEX is getting short of material like everybody else. And instead of having millions of ounces, they're down into the thousands of ounces.
And before we get to Matt's super chat again, by the way, I saw a hilarious tweet from the Happy Hawaiian yesterday, who said that they're out at the LME right now, that the LME vaults have people kicking bags of nickel to make sure they're not rocks because of the bag of rocks that they found in JPM's vault at the LME the other, last week or whatever. And I remember I was joking around, are these calibrated bag kickers? How do you get a job as a bag kicker? I mean, I've been a bag holder before. I've never been a bag kicker. Might I recommend reinforced steel toes?
To calibrate your kick, you got to have something to kick. Do they have bag of rocks?
Yeah.
This bag?
Is there like this, 1980s get in shape montage on how to become a great bag kicker? You need a montage. You're the best around. Everybody kicking rocks over at the LME. And by the way, if they do find rocks, let's say they go and they start kicking bags and the first 100 bags they kick are rocks, do you think we're going to hear about it? No, sir. Nope. Thanks again, Cheeseburger. He says, global trade with precious metal backed currency, CBDC for the serfs. No, the global trade, they'll never go to gold if they can help it. Every country in the world has abandoned the gold standard for a reason, because it's allowed them to steal wealth from the people without the people noticing it. And look, I've done a lot of research on over the last few days and weeks. I'm really trying to get this de-dollaring video done. It's kicking my butt. There's a lot that goes into this. But I've noticed a couple of recurring themes every time the world reserve currency changes. All right. First of all, war. There is extreme violence when the world currency changes. You had the Fourth Anglo-Dutch War, is when the Dutch florin or the Dutch guilder lost its status as reserve currency. All right. Now, why did the Dutch guilder get reserve currency to begin with? Because the Dutch had the strongest navy in the world, and because they had the Dutch East India Trading Company. So they dominated global trade at sea, and they had the navy to back it up. And guilder gets its name from gold. Their currency was backed by, actually, it was silver at the time. And immediately preceding the collapse of the guilder as the reserve currency, they started to take the silver out of the money. Go figure, they started to debase their currency. And then there was a very destructive war with the British. And then they started to lose their trade as they started to lose dominance on the seas, they started to lose global trade. And then the Dutch guilder, the florins, lost its dominance as reserve currency. What became the new reserve currency? The pound sterling. And yes, the pound sterling gets its name from silver. It was a pound of sterling silver. And that was the world's reserve currency right up until about the end of World War I, World War II, where again you had the British had the most powerful navy in the world going into World War I and into World War II. They didn't coming out of it. And you had the English East India Trading Company that controlled global trade all over the world, and they had precious metals in their money. Well, they started to devalue the amount of silver. They lost their dominance on the seas. Their navy lost power. And then the U.S. dollar rose to prominence. And what did the U.S. have? The world's most powerful navy. They had the world's most powerful trade network. And they had money backed by gold and silver. Of course, we're making the same mistakes. We're debasing our currency. It looks like we're heading into a global conflict. So we still have the most powerful navy in the world by a factor of like 15. Nobody even comes close. But it may not always be that way. The advantage our Navy has now is nowhere near the advantage our Navy had not too long ago. So I'm just wondering. But also, in each case of a transition from one reserve currency to another, the emerging reserve currency was backed by gold or silver. In every single case. There has never been a world reserve currency that rose to prominence without gold or silver backing. So that's one reason you pay attention to that story about the BRICS currency backed by gold or backed by platinum group metals. But I'll believe that when I see it.
So I got something to blow your mind. Thank you, Cheeseburger, for your support of the channel. So we're talking a little bit about fourth turning. And if you haven't read that book, I highly recommend you read that book.
Improv.
But,
yep.
That puts Gen Z or Gen Alpha as the strong generation. Just putting that out there.
Well, my daughters would fall into the Gen Alpha, and let's just say I pity the fool that tries to supplant her global hegemony because I can't get that girl to eat dinner. She is ferocious, and she fears nothing. Certainly not me. So I pity the fool. God bless my future son-in-law. She is a wonderful girl. I love my daughter. She is going to make some lucky guy miserable someday. I love her. All right. Thank you very much, Cheeseburger, for your super chat. And thank you, Yakuza Chris. Appreciate that. He says CRE to residential. Asset turned into 30-year mortgage. Okay, so are you asking about the transfer of commercial real estate into residential real estate? You know, there are some buildings that are doing that right now in New York. I have a hard time imagining things like fire code, things like fires. I think that's going to be immensely expensive. The only way to effectively and efficiently convert commercial real estate into residential is going to be through massive borrowing in order to fund that transition. And then what are you going to be left with if you do that? Let's say New York converts half of its commercial real estate into residential real estate because there's a housing shortage in New York. What are you left with? A city of millions of people with no jobs in it. There's nowhere to work now because all the offices were removed. Now, maybe everybody's going to be working from home, but if you have to work from home, why would you cram yourself into a high rise in Manhattan? Why wouldn't you move out into the suburbs? Why wouldn't you get out of that place? So it doesn't necessarily. It's the obvious solution: convert commercial real estate into residential, but it brings with it a whole new bag of problems that need to be worked through, and then they won't be cheap. They won't be easy problems to solve. So your head's in the right place, but before everybody goes pumping money into that, maybe we ought to think that one out first. That's all. Good thought, Yakuza Chris. Thank you very much, sir, for the super chat and for the support of the channel. Mish, you looked like you were about to chime in on that subject.
No, I was talking in chat. I'm sorry.
Roger that. Thank you very much, Dan Hedin, who says, peg to nat gas, U.S. has the largest natural gas untapped reserve. I don't know about peg to natural gas. There may be something along the lines of the petrodollar we could do there, but if you're going to peg the value of your currency to something that's consumable, then that means that, let's say there's some kind of a supply disruption of natural gas for whatever reason we start running out, then we need to make sure we destroy our money at the same pace that the supply of that commodity starts to dry up. Otherwise, you're going to mess with the value of your currency and you're going to be anything but stable. So it's another reason why I think this transition to a BRICS currency backed by a basket of commodities, if they're not careful, like, people will be eating their money. You know what I mean? Like, if your money's backed by wheat or backed by corn, how do you account for consumption with your money supply? And if your money supply growth doesn't change along with population and consumption habits, or there's a lot that can go wrong there. And that's why gold is the perfect monetary metal, because once gold comes out of the ground, it just sits in vaults. It doesn't get very little gold gets consumed in electronics, but for the most part, it just sits. Right? The supply of it is stable, and that's why gold works so well as a monetary metal, because of its rarity and because, well, there's not really that much other use for it. Natural gas can be burned. It consumes. What if there's a fire at a natural gas plant and all the storage goes up in flames? Well, somebody better quick go take a blowtorch to the money. Otherwise, we've messed with the balance. We've messed with the peg of our money. So there's so much that can go wrong there.
I see your link to natural gas and raise you currency based on carbon.
Oh, I just died a little bit on the inside, Mish. Did you hear it? Could you hear you could hear the eye roll, couldn't you? The currency base. You know how to push my buttons so well. He's a natural button pusher. Yeah, carbon currency. All right, here. You want me to pay for that? Here you go. I just paid for my dinner. Here's my currency, carbon. Or no, I planted some lettuce that's going to absorb some carbon. Pay me. Oh, they'll try. Don't get me wrong. They'll try. Carbon credits. What a joke carbon credits have turned into. Supposedly they're trying to do something about it. But thank you very much. That was Yakuza Chris. that said that one? No, that was Dan Hedin. Thank you very much, Dan Hedin, for the support of the channel and everything. All right, guys, we've been going for a while now. I think we're gonna wrap it up there. But look, name of the game, the orange herring. I want to come back to that. Don't follow the story if you want, but don't let it dominate your consumption of news. Pay attention to what they're doing in banks. Pay attention to the controlled demolition of America's small and regional banks and the concentration of power at the top on Wall Street. Pay attention to who benefits. Pay attention to the people who are telling you that bailouts should happen, like Mr. Scott Reckler, who stands to immediately benefit from that bailout, both personally and professionally. Pay attention to what these regulators are doing. Pay attention to the people like Janet Yellen and her $7 million of speaking fees that she collected from big banks in between her tenure as the chair of the Federal Reserve and the Secretary of the Treasury. Are you freaking kidding me? Pay attention to these people, this cabal, what they're doing, and their takeover of finance. And they're doing it in broad daylight, and they're doing it while you're distracted by the orange herring. Don't let them get away with it. That is not the big story. The big story is the consolidation of power on Wall Street right now. Don't let them get away with it. They will use CBDCs to do it. As always, resist CBDCs with every fiber of your beings. Do not give anyone that level of control over your life. Mitch, you got anything you want to add, brother?
A little bit. I think this is very much opening innings of stuff we're in right now. And I don't want people to go out there and blow all the political capital they have on something in the beginning. Might want to hold off a little. So just stay safe. Pick your battles.
Yep. Yeah, and stay away from... Don't get caught up between the idiots with their improvised shields and all that's... You know that's coming. You know that stupidity is coming. Be above it. Stay out of it. And a couple other things. Thank you, everybody, very much for your generosity in the super chats. Thank you to Mish and my Blue Wrenches who keep things neat in the chat. Everything you guys do for the channel. Thank you to my Patreon supporters. I appreciate everything you guys do for the channel. Guys, I say it all the time. Hard times are coming, but they're not here yet. So enjoy the weekend. Spend time with your family. Have fun, but prepare for the hard times. And, oh, by the way, hi, Mom. Hi, Dad. I love you guys. They're in the next room right now. I'm going to go say hi to them. And until next time, live small and dream big.